everybody, welcome to TraderMerlin. It is your weekend edition. Cheers. Hope you all had a fantastic trading week out there. I had a pretty good one. Some nice trades out there. Of course, there were some that I missed, and I love the fact that the viewers yourselves send in messages reminding me of things I may have missed or trades that went awry. We'll address some of that today and look at some of the things that happened this week. Hopefully, as I mentioned, you guys had a pretty good trading week. Today, it's a bird dog kind of week. A friend of mine gave me this one a while back. Bird dog, little single barrel bourbon. So it's that kind of week. I guess it's mid-grade, mid-range week. All right, I'm going to start things off with your basic market outlook, and then I've got a whole bunch of listener questions to get to. Also, a few announcements. With the donations you guys sent in, I actually bought a brand new camera for the show, which is hopefully going to give me much better video, but of course, it's great. The camera itself was like $500. The piece that I have to get to attach it to my PC to get that nice camera to run is another $300. So we have all these different moving parts. Hopefully I'll have it a much better visual, and then I'll take that second camera and I'm hoping to put a whiteboard off to my side over here, so when you guys have questions, I can now go in full-on instructor mode and just go to the whiteboard and draw. I think it'll make it a little more entertaining for you guys and allow me to teach a little bit better. All right, let's go to your market update. There was some nice stuff happening in the market, or certainly some nice moves. I will start things off with your Russell 2000. Now, I know we've got hopefully we'll have a big group today. I know Fridays are kind of getting light there. And Brendan, sorry you can't join us today. Tomasina Gayer, Chuck, Jorge, Austin, good to have you back, my friend. Ivs, Terry, Tom, welcome back. Tomasina, Baldhead, yeah, thank you. That's a great Chinese jacket I got the other day, and I'm a fan. Hello, Chris, Kevin. Good to have you guys all with us. And hello to all of you that are sitting in the shadows, not saying anything. It's okay. We love you too. All right, Russell 2000. You're starting to see what to me looks like the beginning of a nice setup, right? You are starting to see the inability of this market, at least to make highs for the last month, right? We peaked on this huge over-exuberance rally, and now it seems like it's just a slow drift down. Of course, with the COVID-19 cases starting to spike around the country and the colossal ineptitude of our political leaders on both sides of the aisle, not being apolitical, you look like you're starting to see more weakness and skepticism on the markets. That brought the Russell down 2.61% today to 1373. So down below that 1400 mark, which is significant, not tremendously, but it is significant. Oh, Chuck, thank you so much. That helps a lot there. We do appreciate the contribution, Chuck, very much, and always for your comments and support as well. Next on the list, NASDAQ. Now, if you look at the NASDAQ, you would think that this would be down so much more because of Google. I don't know if you guys saw Google today, but that candle is just downright ugly. Let's bring up GOOG for you guys to check this one out. There's Google on the day. It was a bad day for Google. And that slide, and given its weighting in the NASDAQ 100, you would think this would have a much bigger drawdown for the NASDAQ. I actually thought it would be the worst performer out there today. It wasn't. Russell was the worst. NASDAQ was down 2.41%. Right now, you're really looking at what's the next stop for Google. Certainly down here around that 1333 would be your next stop, which is very, very close. I'm going to go back to that NASDAQ 100 because you notice the picture here is dramatically different than what we saw with the Russell 2000. It's not quite forming any lower lows, right? It's really a small little couple-day pullback here. So NASDAQ still obviously would be the lead dog in my mind for the overall market. S&P 500, similar picture to the Russell, right? You're seeing it drift back down today. I was really hoping it to close below 3,000. If it closed below 3,000, that would have been a great sign for a much lower move to the market. It's ending that week on that psychological level. Fortunately for you bulls and anybody holding long positions, you saw it bounce. It did briefly tiptoe below 3,000. I'll show you that on a 15-minute time frame. It briefly went down below it here right before the close, before bouncing. We didn't get that colossal pop we normally get right in that last 30 minutes of the market. That just tells me people just are very, very unsure about the weekend, don't want to be holding anything, and so we closed. We actually closed, I think it was I want to say 3008 or 3009, somewhere in there, and now we're drifting lower a little bit. So really curious to see what happens on Monday morning session, or actually Sunday when we open up. My guess is, my estimate will be that there will be more bad coronavirus numbers coming in, not just in California, which leads the track, but even in the great state of Arizona, who I have a friend who keeps gloating about how amazing Arizona is. No coronavirus here. Yet you guys are now leading in the number of cases in the last 30 days. Just saying, that's okay. It's all right. Don't worry about it. Arizona, coronavirus here and there. But yeah, we'll see what happens on Sunday night. I think you'll see this gap down, and if there is enough fear, we'll see it continue to slide, which of course would bode well for my short position right now. Tracy, thank you so much. First time you made the live show. First time. Well, welcome aboard. Good to have you with us. Glad to see you've been watching for 10 years. I love the loyalty. For those that may be new to this program, I actually hosted a show in April 1st would have been 10 years, literally a decade of doing power trading radio, 5 days a week. I took 2 weeks off per year for vacation. Other than that, I almost never missed a day. So, I think it was over like 2,500 shows we did. It was crazy. Thank you for the support over the years, and thank you for the contribution. I really do appreciate that. And cheers to your tequila drink out there. Even if you're not drinking alcohol, guys, it's okay. We don't support alcoholism here. It's just a little relief at the end of the day. But thank you, Tracy, so much for the contribution. I do appreciate it. All right, moving on. S&P, which is the one that I'm in, it's at 3,003 right now. We'll leave that one alone and move on to crude oil, which gave back a little bit of its gains today. The intraday had just tons of chop. It's the daily that I like, though. Again, we looked at this chart the other day and we were talking about how it was on a really aggressive uptrend, saw it really mount this huge rally. You're not going to be able to put on a trend line on this one, which is probably why you'd want to use something like a moving average, which we could tweak a moving average to get to hug this. My guess is it's going to be very close to a 20-period moving average. So let me add that on here, put on the 2 line. So this is your 20 right here. So it's basically sticking to the 20 right now. We haven't had a close below it. So if you're looking to go long crude oil, this could actually be a buying opportunity because you had a small little pullback. My assumption would be that based off this building pressure where it's making higher lows, we'll breach this high of 40.69, the high closing price, 40.69, probably next week. After that, you notice in between these two black horizontal lines, there's a big unfilled gap, and I think crude oil is going to rip and end up filling that gap. We will see if it gets back in there. We'll see. Not 100% sure, but we'll see. Never 100% sure on anything. All right, moving up the list, we got Bitcoin B to the T to the C, down 0.96%. Again, same picture as yesterday. It's still just traversing sideways. I'm going to do this. We've done this a few times where I'll just throw a box around it, and I feel like price is kind of trapped in this range on Bitcoin right there. Even though we did breach it a little bit in the past, it seems like for the past 3 weeks to a month, we've been stuck in that range. So until it really breaks out of that, I don't really see anything noteworthy to talk about with Bitcoin. I know we could talk about the technology, but I would bore some of you to death. Let's go to number one performer, gold. Moving back towards the top end of that range. It's at 1784 on the day. Real nice move to the upside for gold. I'm bullish. I think you're going to see it break through that 1800 mark here. If that does happen, we got to take a step back and look at something like the weekly, maybe even the monthly, to find out where this bad boy may be headed. There's your monthly on gold. A gorgeous, gorgeous chart. Obviously, you've got this incredible target right around 1900, which might be your next big stop. We'll have to wait a while for that one there. Tracy won a gold coin a long time ago? Yeah, it's kind of funny. It's interesting. Obviously, doing this show completely independent of any business or anybody pressuring me to have this guest on or that guest on or say this or say that. It's very different. And of course, one of my big challenges on this is how do I gain or build the viewership? How do I try to get more viewers to the program? I actually thought about doing a gold coin contest for this show. Of course, that would cost me out of pocket, but I'm debating doing that and running Facebook and YouTube ads to see if that works again. I thought the gold coin contest was a pretty cool idea. Makes it competitive as well, right? You get to see who picked the closest price to gold, and maybe I'll try to bring that back. Maybe. I think the best way for me to do it is to see if I can actually get a sponsor from like a gold coin company, and we'll see. But that's one of my ideas to hopefully get some viewers. Let's see. Don't believe everything you hear. Arizona rules. Oh, Thomas, you're not in Arizona? Let's see. Merlin, do you think the market will sell off early next week due to the end of quarter? Fund managers cashing out in the near peak? Yeah. I think it's not going to crash. I think you're going to see a little bit of weakness. And also, remember, the first of the month is generally when you have those 401k contributions pouring in, and unemployment numbers are still very high. So I think that's still going to be a factor here in it's no longer the catalyst that it used to be. Kind of near the first of the month, it was you knew that money was pouring into the markets and that would push it up. Now we don't have as much as we did before. So I don't think it's necessarily the fund managers cashing out near the peak. I think it's just market dynamics right now. I think that fund managers and institutions are going to start to look at this as the uncertainty ahead is probably much greater than the certainty ahead, right? I know we hear about Fed Chairman Powell speaking, and he talks about how uncertain the future is. If this is one of the elite guys and he's saying it's very uncertain, I'm pretty sure some of these institutions are feeling that as well. And we always look back at the Fed and say, hey, they're backstopping everything and they're the ones that are going to push it higher, which is 100% true. But at some point, the pressure in the markets to get out, lock in profits, take some money off the table becomes so great that all of a sudden things sell off. I've mentioned this one in the past. There is a litmus test that I did, or I actually pay attention to, which is the number of homes for sale in my area. I live in Southern California. My area, for the last few years, has almost had no home sales in my area, which has been very interesting. Last time I saw this many for sale signs was back in 2008 and 2009. Of course, we all know what happened in 2008 and 2009. It was an aggressive market sell-off. Things plummeted. And, of course, everyone's saying, hey, I want to get out of my house. I want to get out. All of a sudden, there are people in this neighborhood. The for sale sign went up yesterday of somebody who's lived in this neighborhood for 30 years. When I first moved here, they're one of the main people I know. And I'm like, hey, wait a minute. These guys are jumping ship, and it has to do with things getting a little overpriced. In their mind, they're like, we've never seen prices like this here. We want to cash in and move. And I'm like, okay. It's all down the block, homes for sale. To me, that's a sign of weakness, of people showing skepticism and wanting to cash out, and that could lead to more downside move. Larry says, what do I think of the $1,400 level on gold? Well, I think it's a hell of a long ways away. On the gold futures, I'm not, to be honest, I'm not a big fan of the 1,400 level, right? Look at the chart. I'm a supply and demand guy. Now, we could always sit here and say, hey, 1,400 is a nice even number, right? And therefore, you would think that that is where things are going to be headed, right? A whole number. And I do believe in whole number psychology, but you notice there isn't too much of that going on with gold. You have the 1,600 had a nice little bounce off of it right there, boom, to total bottom of the tail. But there's nothing here at that 1,400 level. Now, I could probably break this candle apart on the monthly, and there might be something in there. Let's go to the weekly. Okay. This is why I love looking at different pictures. The picture completely changed there. Absolutely changed, Larry. I do like it now. I like it much better just because you had that hesitation and then a move out. I still think that for you to get there, you've got a big challenge ahead of you. You have many challenges, to be honest. I mean, obviously, these lows on this weekly that go right down to about 1675 is going to be an ugly one to get through. And then you have this area right around 1500. So let's just say if it got to 1400, I would probably be happy being a buyer if it got to 1400. I don't think you're going to see that big of a sell-off. Ask yourself this. What would it take for gold to sell off aggressively? It would be, in one scenario, it would be that people have so much faith in just buying the equity markets that why even bother with gold, right? Because the rate of return I would get from the equity market is exponentially higher. That would have to be the train of thought here. Does anybody feel that way? Like all of a sudden that there's nothing to stop this market? Like there's just nothing in front of us that could possibly derail this market? That's when you would see a huge run to gold. Or sorry, a run out of gold, excuse me. Money goes to the equity markets and we come out of the gold market. I think it's the exact opposite here. I think there's so many headwinds, there's so many challenges that people are going to be looking to that tangible gold, and that will end up driving it higher. Could be totally wrong, but if I do see it drop to 1400, I like your level. I would be a buyer at 1400. I hope I answered that question. Alpha says, do I drink tequila? I had an issue with tequila when I was like 18 years old. I know I shouldn't have even drink it. Long story out there, but I do drink tequila every now and again. Not my favorite drink of choice. And you know what? I know you're talking about the Terramana, which is The Rock. I was following The Rock on Instagram, and I finally just had to stop following the guy on Instagram because every single post is promoting his tequila, which I'm if it's delicious, I'm happy. I'll get a bottle around the house for guests, but I'm usually not a big tequila drinker. Whiskey is my topic du jour, or my drink du jour. All right, let's see. I'm going to go to some, I got a couple listener questions here. If you guys have chart questions, feel free to send those on in. I'll be going through them as much as possible. The whiskey's hitting me hard. As much as possible. Here is a picture that I hope to be at soon. For those of you who are bashing Kevin Hart's site, those two are honestly like the best friends. They're the perfect match to pick on each other. It's absolutely entertaining watching those two. I love it. This is a beach in Phuket, Thailand. It's actually the Merlin bar, by the way. So if you ever want to go to the Merlin bar, it's not mine. I would like to have a bar like this someday. Trading week rack up. Went over some of the things. I will get to more of that as we go. Keith Keith just really liked rubbing my nose in this one. He says, hey, I saw the Netflix tank today. Are you bummed that you missed it? You guys crack me up. No, actually, I don't at all. I do not have that remorse whatsoever. But let me tell you why I have no remorse. Here, let's go to the daily.d, and I will bring that full screen for you guys. We had talked about these levels here, right? No big deal. I had actually drawn in here. Let me make sure I'm not on snap mode. Okay, perfect. I was looking at this zone and said, all right, if it breaks above that little yellow box, or sorry, if it gets into that yellow box and then comes down out of it and goes below 451, that was a shorting opportunity. Of course, on that day, it didn't. It just opened up, it rallied, right? I think for those of you who are watching this show, you remember we were right here talking about that trade and said it's in the zone right now, but I would wait for confirmation. That's really my for this specific trade. The next day, it ripped up. I don't care. Just didn't do what I thought it was going to do. And now, today you had a ripper of a down day. I don't care. I really could care less. I'm not even an afterthought that this was a trade I could have been in, because if I was in this trade holding it short, I would have been a loser and underwater for a while. And then I didn't want to be in that position on Netflix. So Keith, could care less. Netflix really, I'm not bummed at all that I missed it. There's other trades out there. All right. Dave on Twitter sent this one in. He says, Merlin, think we could talk about profit taking. I had a major swing from being unable to get in a trade to now being unable to fight greed and get out of a trade. All right. That's a pretty important topic, actually. I think that, sometimes, I think somebody mentioned years ago that I sound extremely condescending. No, I don't mean to be condescending. I mean to kick people in the butt and get them motivated to achieve whatever goals it is that you're trying to achieve. Now, with that specific situation, you were saying you had a difficulty getting in. And that maybe was, there were some comments I made last week, maybe even this week, about I don't think you should be in simulator very long, right? I think you should be there to learn your platform. Make sure you understand how your platform works. Just like when you go learn how to drive a car, sit in it in a parking lot somewhere and push all the buttons, make sure you know what it all does, so that when you finally drive the car, it's not foreign to you and you stumble and crash because you don't know what the buttons do. Trading platforms are no different. Whether you're using Thinkorswim, TradeStation, Click, doesn't matter to me what platform you use. It just needs to be the right platform for you and understand it. That's what Simulator is great for. Once you get live in trading, start small, have some skin in the game so you feel the emotion, you get the sweaty palms and those types of things. With regards to taking profits, okay, this is something that should be written down in your trading plan, which is a working document. It will always be changing and modified and tweaked and revised. But it should be in there as far as what you do with regards to taking profits. So I guess I could look back at Netflix here and make an assumption as far as where our targets would be. So let's say I'm totally fabricating this right now, guys, just because I don't have another example in the top of my head. And let's say that we had a zone that looked like this, right? Here's our supply zone. We'll make it just obnoxiously large, right? And price went into that zone. I feel bad I don't have a real example off the top of my head. Went in the zone, you entered the trade, and now all of a sudden you're profitable short in this bad boy. Let's say I had 100 shares of this, okay? 100 shares. Before I even made the trade, I would already be thinking about where I expect this bad boy to move, right? And there's a few different spots here. I would expect it to come actually right to where it came today. I'd expect it to fill this gap. And then there's a level that I would do a little bit more research here, maybe refine this one. But you can see I now have some downside targets for this bad boy. So as far as where to get out, let's say you shorted 100 shares, you're now in profit. Number one, what I would do is this zone is now dead to me, right? It means nothing to me at this point. I am now going to take my stop loss. I'm going to move it down into profitability somewhere, just to make sure that I'm going to take something home on the full 100 shares. I know this flies in the face of what a lot of people teach, that you should just leave your stop there, let it pan out. I say BS. I want to make sure that if that thing is finally in profit, that I'm taking something home. How does this happen to anybody here? You guys got a great tequila discussion going on. I might have to switch my drink to tequila today. How many of you have opened a trade, whether long or short? You're now profitable. Let's say you're up $300, $400, $500, and you leave your stop where it's at. A couple hours or a day later, 2 days later, whatever. All of a sudden, instead of being up $500, you're down $300 and you get stopped out of your stop loss. It's crushing. It tears you apart because you're like, son of a, I had a $500 profit and now I'm out $300. Idiot. Dumb me. I move my stop up into profitability. So if I was up 500, I'd probably move it up to where I was guaranteed to take $200 home. That way I know I'm going to guarantee to take something home. And from there, I will use the levels that I targeted where I peel off some. In this example on this Netflix, all right, let's say our target was this 435.96. All right, so at 436, I would take off half of it, right? Just get me off 50 shares. And then I'd take the second half, maybe set a trailing stop or exit when it gets down to 417. The point here is the rules in place need to be there for you and your trading plan. For me, it's fairly simple. I move my stop to break even plus once I'm in profit. I'll scale out of something as well at the major supplier demand zones depending on which way that trade's going. And be systematic about it. I do think you'll always leave money on the table. There's always going to be something that you leave on the table, and it shouldn't be anything that you get upset about. It's just the cost of doing business. As long as you're making money, it's fine. Leave a little bit on the table. Kind of like in Vegas, you make some money playing blackjack. I'm okay to tip the dealer. So I'm leaving money on the table essentially. All right. GD, I am a huge fan of them. I don't usually do them. I like to be in front of the screen. So the question that came in, I know we have some those of you on the podcast right now, and I used to say those of you at the gym, which we know that probably isn't happening. Those of you on your Peloton right now. Let's see. I'm going to go to, where was that question? GD says, so no set and forget orders that OTA teaches. You should all be at least using stop loss orders. Set and forget orders are great because you put your entry, stop loss, price target, and let the computer do its thing. I generally don't. I generally like to manually enter. If there's a setup that I really feel comfortable with, I will do all three variables, but usually I will enter manually and I put stop losses on it, and depending on the trade setup, I'll throw targets in there. The most important thing, as I've emphasized for years, is the stop loss portion. Right? I just can't afford to have a huge loser that's beyond what I defined when I went into the trade. Right? That's the key for me, and I think it's the key for anybody who aspires to have longevity in trading. All right, Kevin, my account at 10K doesn't let me take more than a contract since my risk is $50. It's hard to find zones small enough to get 2 contracts. Yeah. You can't take 2 contracts with a $10,000 account? You sure about that? On the minis? I'm pretty sure you can. Maybe the margin requirement jumped. I don't know. I haven't had a $10,000 account. I'm not quite sure on that one. So what's the solution there? If you can only trade one, and you're trading futures, and you can trade 1 contract but not 2, that poses a big challenge, doesn't it? Right? Obviously, you can't be peeling off at targets, so you're kind of handicapped there. But you can still do the same basic pieces, right? You can have your stop loss in there. You can also set a target, right? And stick to it when it hits your target. Here's what I would do if I only had 1 contract. So let's say... let me go see if I can bring up a chart here and make some examples on the live market data. Unfortunately, it would be easier with a long explanation. Let's go. What do I got here? All right, so let's... I'm just going to make numbers up. I got crude oil, right? So you go long CL. You got your entry, stop, and your target's going to be up at those highs, right? We'll keep it real simple just for a visual example here. All right, so you've got a setup like that. And you're thinking, all right, crude oil is gonna rally back up. It's gonna challenge that 40.50, and you bought one as it came back down to this area of demand, right? Let's say $37, right? So you're at 37, and you're now riding it up. I would be moving my stop loss up to break even plus, so I know I'm taking something home with that 1 contract, right? So I move it up a little bit. From there, I will do one of 2 things, or you can do one of 2 things. You just let it keep moving up, and people will move their stop loss up each day and use a hard stop. Right, just move that line up below the low of the previous day. Or what you could do is go into your order setting bar and set trailing stops, which I am a fan. I really actually do like trailing stops. The only thing with the trailing stop is you know that you're leaving money on the table. 100% guaranteed you will leave money on the table, because for a trailing stop to work, as it moves up, it's going to be moving that stop loss up with it. And it has to come back down to take you out. So you always leave something on the table with the trailing stop. But I like those because it's a no-brainer. You just let the computer do what it does. That's what I would do if I had the 1 contract. I would either stay with that fixed target and move my stop up manually, or set a trailing stop and let it go. Yeah, yeah. The Chris with the micros, that's different. Yeah, of course you can trade the two micros. Yeah, I think he's just trading the two minis. For $50, risk it's hard because it's $5 a point on. Oh, so you are trading the micros. Yep, that's true. Kevin says that $50 risk it's hard because the $5 point on the micro ES and the micro NQ. Yeah, but with 10 grand, you should be able to trade two minis. Not micros, but two micros would be easy. You don't need 10 grand to trade two of the MES, right? You might want to move, a 10-point stop on the MES. Let me bring it up real quick. Let's just go to bring up a chart here. So here's your September. This is the micro E mini. Let me just check out your ATR here. Hold your analysis technique, go up to the ATR, average true range, and of course it does it in yellow. Isn't that nice? The beauty of using white background. So we'll take it there. We'll bump this up so you guys can see. What I'm adding on here is the ATR, which tells you how much it moves over a certain period of time, and it's moving 90 points. Whew, that's a good one. So if you break that down in, let's say, a 15-minute time frame, you're getting about 10 points. So, you're 50. You said you were at, I think, a 10-point stop loss, right? Is that what it was? I think that's what you're talking about. Yes. And if you're trading on the 15, then 10 points worth of risk is actually going to work, right? That's you would have a 9-point range here on that MES right now, and that's actually rather elevated. We had a pretty heightened day today during that sell-off. So you did get to 1 point. You're up over, 14? 13 points. So, 10 should be okay. Yeah. All right. Boy, I'm trying to read through all this, guys, so sorry if I'm missing out. After the vaccine comes out, should we have a trader's retreat in some tropical island for a long weekend? It would be so much fun. It's funny because years ago I actually proposed that what we do is we get a cruise ship and just go out of LA or something and just do a 3-day cruise to Mexico. And, while we're out in the ocean, we just have some nice, strategic lessons and teaching moments and stuff like that. But we all have a nice cruise. There are some companies that do that one. There is a trader's cruise, but I won't mention names. There were two people that were organizing that I just felt were really shady people, and I didn't think they would give anything of value to their customers. So they were trying to bring certain people in to add value because these guys are just shysters. But there are some traders cruises out there. Maybe down the road. Maybe I'll do a TraderMerlin cruise if I ever get this thing big enough. Yes, Kevin, so you said 10 points for one. Yep. And unfortunately, you're right. You would have to go, if you were going to try to cut that even smaller, you'd have to drop it down to the 5-minute time frame to make that work for you. This begs the question, do you go and change your parameters? So if you're looking at losing 50, maybe now you risk 100. Right? Is that going to damage things for you? Is that too much risk to take? Because then you might be able to have that scale factor with that second extra $50. I know it's tricky because you find that number that's comfortable for you with regards to a daily stop loss. Maybe that would help. Yeah, right. Let's get on that boat. All right, let me go to another. There were some other questions that came through here. So I think that was from what that question was there. That was from Dave on Twitter. Dave, hopefully I shed some light on that. If there's any more depth that you want me to go into, just, you were out on Twitter, just send it back in on Twitter, and hopefully I'll get to dive a little bit deeper into that topic. It's a fairly complex one, and we could, have an all-day class just on the proper stop and trailing stop management. But that's just some basic ideas for you with regards to greed. Don't. You got to fight the greed piece. The greed will absolutely kill you in staying in too long. Just move the stop loss up, and if you get stopped out for a profit, no big deal. Love it. Move on to the next one. Okay. Taylor K sent this one in, and thank you. He might even be here today. He was in the room the last couple days. Taylor says, is SDAO something that you would look at for an options position, having the same bias that the market is going to crash hard, as I do? If so, what would your strategy be? Well, the answer is no, I wouldn't use it. I would stay away from SDAO. Because when I'm trading, especially in a position like I'm in with that many options contracts, I can't afford to have an illiquid moment. I can't afford to have the spread widen as I'm trying to unload if I decide to, all of a sudden dump this at once. And I'll show you the open interest on these options chains right here, just so you have an idea. For those that don't know, SDOW is a triple short Dow product, right? So it's a leveraged ETF, which already suffers from time decay, which makes it a bit dangerous. Now, let me take this average true range off. We'll make this go SDOW, and I'll show you guys the daily. So here's your SDOW. As you can see, it's the Pro Shares Ultra Pro Short Dow 30. So that's triple leveraged short. Obviously, it was a great day today, up almost 8.5%. But I'm going to show you the implied open interest, which shows you the number of options that are out there. And that will maybe paint a clearer picture. So let's go open interest for all options, and I'll slap that one on here. Now, I know it's kind of hard to see in the magenta at the bottom, but you can see on a daily basis right now, as of close today, the options interest on that one is 63,516. That's how many options are currently available on SDOW. What's different about this is if I look at the one that I trade the most, and the number one thing that I trade options on, hands down, SPY, because it's trading 21 million right now. 21 million. So if you look at the pool of liquidity, take 63,000 as a swim. Imagine these are both swimming pools, right? 63,000 is like the little baby pool that your kids swim in. It's so shallow that if you belly flopped in it, you'd probably hurt yourself. I look at the options world for SPY, that's like an Olympic-sized swimming pool that's 60 feet deep. There's no way you're going to hurt yourself jumping into that thing, right? The spreads are going to be real tight because there's generally competition, depending on what strike price, right, obviously. But when you have that much liquidity, pricing is going to be much better. Now, what is it like for some of the other options out there? Because I know a lot of you are looking at other pieces. Let's go to like DIA, right? Dow Jones Industrial Average. This is the main ETF for the Dow. It's only trading 550,000. So to me, this is one I don't really trade. QQQ, now that's good. That's usually about 6 million. There you go, 6.4 million. So there's a lot of liquidity in these ones. That's why I stick with them. I mean, we could look at Nikola, right? We talked about Nikola. I actually bought 10 puts just for fun on this bad boy. Right now it's at 618,000. But notice the difference here. That 618,000 is only right now. If you go back to May 1st, this thing had 29,000 options in it. There was nothing. There's almost nothing going on in this. It's just right now. It's absolutely crazy with regards to options interest. Russell 2000 is also one that I like. That's 6.9 million. So the three main things that I will trade options on, SPY, QQQ, and IWM, are all over 6 million active options available. The SDOW, or you can pick another one. UPRO is another one, right? UPRO. This is the same thing, but on the S&P. It's a triple short S&P. And, no, sorry, this is triple long S&P. It only has 98,000 options. Again, very, very illiquid. OU812 says, what about SQQQ? This is going to be even lower. Oh, actually, no, it's pretty good. That's actually really good compared to some of the others. You have 596,000 on SQQQ. So if I had my choice, guys, and I was looking at trading these ultra pro short triple leverage ones, I wouldn't touch SDOW. I would leave it alone. Look at the volume. There's 63,000 is nothing. Leave it alone. Move on to something else. You can find this picture in most of the markets, meaning the overall market. So if I looked at the DIA, here's Dow Jones Industrial Average, right? Which is looking fairly weak. It's sitting right at this ETF paints a different picture, doesn't it? I mean, this looks absolutely beautiful as a potential break to the downside. Right there. Look at that line. It's not an inverse head. It's not a head and shoulders pattern, but boy, I tell you what, that thing looks like it's ready to break and just rip. And they got two gaps here that look unfilled that are going to probably fill if that thing does break. So I get why you want to go short this bad boy, but the liquidity's not there. So maybe I shift my focus to the swimming pool that's got more water in it. Clearly, that's SPY. It's a similar picture, but not quite the same. IWM also. And then let's look at QQQ. QQQ is way stronger. But anyway, hopefully that helped out there. Yeah, there you are, Taylor. Good to have you with us. And thanks for the question, brother. Appreciate it. SPXU, 203,000. So again, it's not that great. You know, it's not really, really heavy liquidity. And here's the thing. While the setup may look great, I have to always take into consideration risk. Now, if you're buying 1 or 2 contracts, it's probably not going to be that bad. But remember, those spreads can get real wide on these options, especially when things start moving fast and implied volatility starts to spike. Those spreads just really widen. So the more people that are playing, the more options contracts are available, the more competitive the pricing will be, which is why if you've ever taken an online trading academy class, we actually run a filter to get rid of any stock that's below certain volume thresholds. Why? Because it gives us added risk to have low volume and low liquidity. I just don't want, even though there's some great name companies in those low volume stocks, I don't care. Because as a trader, I don't really care what it is that I'm trading. It makes no difference to me if they make nuclear bombs or toilet paper. For me personally, biotechs are off the table. I don't trade biotechs just because of personal reasons. But other than that, I really don't care what they do. Who cares? I'm not buying, I'm not shorting Nikola right now because I think it's a garbage company. I think it's way overvalued right now and it got pumped up and I think it's going to head down. It has nothing to do with the company. Oh, Rajesh, thank you so much. Wow. That's a good Friday. Cheers to you, Rajesh, my friend. Appreciate that one. You notice I have to use napkins now to keep it quiet so I don't make noise on the microphone. Thank you, Rajesh, for that. I really do appreciate that. All the contributions are very helpful, and it's going to go towards the show, so you will see some improvements here once I get the office a little bit better. But thank you very much for that contribution. I appreciate it. Dirty Kid says, unfortunately, my account doesn't let me trade options. It's an IRA account. So I have to trade the triple X inverse leverage ETFs. They work okay. Careful. We've done this before. Maybe next week, if I can find the files, I will show you the inverse ETFs in comparison with the regular ETFs. Those triple leverage ones are actually fairly dangerous to your account the longer you hold them. The longer you're in them. Yeah, right? Rajesh, what do you got for me? Send me a question. The longer you hold these things, the more they're decaying. So they're dangerous. It really depends on where you have your IRA. I'm kind of surprised. You can trade options in an IRA. It's actually a very common thing. So I would maybe search around to a different firm. You can transfer those IRAs very easily. I know if you had an E-Trade or Ameritrade account, they're pretty easy at letting you trade options in there. So you might want to consider that. At least look at what gives you more flexibility. One of the best tools for your IRA, so you don't take too much risk, again, is selling options and just collecting premium out there. All right. Back to my listener questions. So that was the SDAO one. I'm not messing with SDAO. I leave that one totally alone. This one came through today, right in your market close, from Dell. Dell, thank you for this one. You kind of back up my comment here for Biotech. If I remember correctly, Inovio is a pharmaceutical company. He says, what's your take on Inovio? Huge mover. I can tell you right now, I don't like it. Only because it's a drug stock. So let's go to INO. Okay, great. Well, let me take this back a hair here, and I want you guys to pretend that you are Trader Merlin right now. And you tell me, what would I have told you if you showed me this picture? If I showed you that picture right there, what would you be saying? Would I be bullish or bearish on the securities? I think you should be going long or short. Guys, you tell me. Right? I look at INO here, and this is not the longest period of time. It's the daily going back into April, right? February. And you can see, obviously, that huge spike up. But what has it been doing? Since that initial drop on March 9th, it's been doing what? You got yourself a nice little trend. It's making higher lows. It's starting to make some higher highs. Yes, Joseph, you'd be right. I would say it's in supply. I would tell you, don't buy right now. I would look to buy and join this uptrend. So I'd be looking to buy at some demand levels here, right? Because it looks like it's starting to build a trend. Yes, I don't know what happened with this spike back here. That's obviously drug company stuff. That's nuts. I mean, it went from $4 to a high of $19.36 in a period of 5 days. That's crazy. But the picture, the overall picture of what was happening with price, it's a trend, right? It's making higher lows. Right here, I would tell you, Amanda, guys, if it breaks above, let's say the 16 mark, or maybe even these high as 1650 mark, I like it. I think this thing's got a lot of room to run. But at this point here, Dell, I wouldn't touch this with anybody's money. I wouldn't touch this with your money at all. Yeah, Gary, you're probably right that it's not old enough, right? It just hasn't been there. But I do like the fact that there was a period where it's making higher lows. It's all psychology to me of price movement. Right now, I wouldn't touch this with a 10-foot pole. If anything, I'd be looking to short it because I feel like it got pumped and way overdone, right? I would say, forget it. This thing's crazy. And this is typical of pharmaceuticals. I haven't looked at it. I haven't looked at what they do or what has happened with this company. Bottom line is, I'm not a fan. I would just stay away from it, and this is why I don't like drug stocks, because I found myself on the other side of this short, and all of a sudden these things spike up like that. So, Del, I've not much helped you on this one. I don't like trading biotechs or pharmaceuticals. If I'm involved with... No, don't buy puts on this one. No, I would leave it alone. Leave it alone. You know, here's the problem. We all like excitement, and one of my really good friends, and I've heard it many times in the industry, but one of my friends says it a lot. He goes, at its best, trading is extremely boring. So a part of us wants to find securities that look like this, that have this colossal spike up to be a part of, so we can be high-fiving our friends going, dude, I was on that move from $14 to $32 in 3 days. You know, I made over 100% in 3 days. People love to talk about that type of stuff. It shouldn't be commonplace because it's so rare to make 100% in 4 days. Some of you may have done it, you know, it happens, but that's not your goal. Your goal is not to make 100% in 4 days. If you made 100% in 4 days, you have taken some serious friggin' chances. You put yourselves at risk by putting it into something that is so extreme, so volatile, that it could very easily cost you 60, 70% of your value of your portfolio in that same trade. So at its best, what we do is boring. You know, I'm not trading the most exciting stuff. Right now, you know, predominantly I'm in SPY. I have a little GLD, I've got some silver, I have some oil, but I'm not trading the really bizarro stuff. Oh, Rajesh, it's in the list for coronavirus. It's funny because all you have to do now is just call yourself coronavirus. I should buy a shell. Here we go, guys. How about we all pitch in? We go find a shell corporation. Doesn't matter what the company name is because we just rewrite the name. And the name of the company would be coronavaccine.com. Our stock would go from a nickel to like $500 because of all the Robinhood morons and be going, oh my God, coronavaccine.com, they must have it. Let's get rich real quick. Of course, you have to deal with the FTC and regulators and all that stuff. It's just a website to talk about marketing, you know. Oh, tell you what, I'm pretty sure there's be somebody out there that's doing something like that, you know. Making it a vaccine company and just trying to get their name on that list, because all you have to do is get your name on the list of possible vaccines for coronavirus. And yeah, I saw the comment come through earlier, which is, how many vaccines do we have for the flu? Does it really work? I know more people that get the flu shot and then get the flu or are sicker than they would have if they just had the flu. So I don't. Seems crazy to me. Not my term to pontificate on that one. Gary, thank you very much as well. Appreciate that. If you guys are sending in the contributions here, you can always send in some questions. I'll give priority to those that send in the capital out there. So, but am I right, Rajesh? It's just like Long Island Iced Tea changed their name to Long Island Blockchain, and I think is it LONG? I don't remember the symbol for that one. But it might be gone now. It was just nuts. They tripled in value in like a week because they went to Long Island Blockchain. You can't delete this video to avoid liability. Yeah, right? Oh, man. You know, it's funny. It was actually not funny. I was actually talking to some students years and years ago. I probably shouldn't even say this one, but, I mean, there are so many ways that you could manipulate the markets and make a grip of cash. And it's surprised it doesn't happen more. Obviously, some of it would entail doing some really shady things. That's not for me at all. I'm not that type of person in any way, shape, or form. But boy, you could do some very simple things to get a security to drop 20, 30, 40% in a matter of days. Very simple things. I'm just surprised this stuff doesn't happen much more often. But that's just one of the risks of being in these financial markets, is there are people out there who are manipulators and will do things to, sway things in their favor and with no concern for anybody else. All right, any other last minute questions? And Mike M says, risk management is key. I would say risk management is probably the single most important thing. You know, I mentioned it yesterday when we were talking about if you go back and change one thing about your trading, what would it be? And it's basically just forget about making money. Now, my phrase I love to use is trading is not about making money. It's a byproduct of not losing it. Therefore, you got to focus on those losses. And, you know, you can have a period of time where you're on a huge winning streak. And you start bragging that, I've got an 80% win ratio or 90% win ratio, and I'm winning almost all my trades. Great. And one loss comes along. You win 90% of your trades, but that 10% that you lose, loses 8 times as much as you made on the 90% winners, right? One loss could erase everything. I have been there multiple times where I've been up for the week like 10 grand, right? Monday, Tuesday, Wednesday, Thursday. I've got $10,000 going and I'm loving it. Woo, having a great week. Friday comes along. Oh, shit. I lost 25. You're like, are you kidding me? What is wrong with you? And I just got to my stop loss. I would have had a great week. Instead, you just keep letting it go and go and go, and you keep fighting and pushing and trying to revenge trade, and all of a sudden you lose more. So it's more than just risk management. It's concrete discipline and making sure you follow those rules, because it's so easy for us to break our rules. When I say this, again, I don't want to sound so condescending to you guys, but I have been through all of it. You name something stupid. If I had a small tattoo for every stupid mistake I made, I would be covered from head to toe. Face tattoos and all. How long did it take for you to get profitable? A while. I would say it took me about a year before I really cleaned up all my stupid habits and started to get some semblance of consistency. But there's periods where I lose as well. Being consistently profitable doesn't mean you're making money all the time. Right? There are periods where I go on losing streaks, and for that I have to put circuit breakers on. And I'm human just like anybody else. I may read the market wrong, make the wrong plays. That's fine, but I have to put a stop to my trading at that point in time. It's kind of like in baseball. I know that if a player goes on a bad hitting streak where they just never seem to hit the ball, the coach will bench him for a day or two. Regroup. Stop. You're not even in the game. You're going to sit on the bench for 2 days and regroup. And to me, holy cow. James, do I have to dance? Do I have to sing? You want me to sing, Fly Me to the Moon? Jeez, James, thank you so much for that. That's one heck of a contribution. Thank you very, very much. Now you're going to make me put up the whiteboard this weekend. Wow, thank you. I'm glowing with embarrassment over here, but that's a very nice donation. Thank you, James. I do appreciate it. Did you subscribe to any stock market services that gave you buy and sell advice? I did not. First off, I'm way too cheap to go and pay. I'm way too cheap to go and pay for services like that. I would listen sometimes to other people's subscriptions or read stuff, and then I realized none of these people have anything better than what you have, I believe. I believe that the reason that you would subscribe to someone's service or newsletter is to learn from their personal experiences, to instill your discipline, your confidence, your routine, and really start to lock that down through hand-holding or understanding their process. To me, that's one of the main reasons why I taught at Online Trading Academy is that same thing. I want to instill that process. And I know that that's the same thing in XLTs over there, it's about process. But I've never paid for subscription services or anything like that, certainly not newsletters. There's a lot of great free information out there. And I think that we can all do the research that we need to be successful all on our own, 100%. It just takes time, and you have to know what you're looking at. It's flowing in today. We're having a great day here at TraderMerlin. Freudian slip there. Miles, thank you very much. One of my favorite albums ever. If you guys want to, it's a bizarre, very, very strange album, is Miles Davis. I think it's called On the Corner or Standing on the Corner. Just a 30-minute just jam session with Miles Davis. Anyway, Miles, thank you very much. I appreciate that as well. Gary, bye for now. Have a great evening. Let's see. I'm trying to read through other questions. Cricket analogies. I have a bunch of those. Let's see. What else have I got? Any last minute questions, guys, as I wrap up here? You guys really, really went above and beyond today with the contributions. I do appreciate that. All right, as I wait for last minute questions, I'm going to go full screen, show you your economic calendar for Monday. There's not a ton happening in the U.S., but there is global stuff happening. You'll see right in the middle here, you've got pending U.S. home sales. Is it the Monday the 30th? I think I have the date wrong. It's the 29th on Monday, so my apologies for that one. I'll get on the IT guy, which of course would be me. You have pending home sales, expecting a significant increase there, which is interesting. Other than that, you've got the British pound of GDP, but that's going to be late in the evening on Monday night, and it's pretty much it. Other than that, there's not too much to think about or look forward to on the economic. That's earnings. It's an economic front for Monday. Anyway, that's what I got for you guys for today's show. If I get last minute questions here, I will get to them. Merlin, were you there on the Trader Summit Thoughts? Yeah, I was there. I liked it. That was great. I didn't stay for the whole thing. I had other things to look at, but I just love the approach, and I think it's a great forum, a great venue. Obviously, I wouldn't have people on the program if I didn't like them. As you guys have mentioned, you've asked for certain people to come on this program, and I've told you flat out that they will not be on this program because I think that they're scumbags and have no business being on this show or in trading, period. But, those are certain people that people hail in high regard. So if I bring somebody on this program, you have Corey Lane on the program the other day of Traders Army, and that's what I think you're referring to as a Trader Summit. He's a stand-up guy, great guy. I'm going to have Justin Krebs next Wednesday. We're going to have Ryan Watkins in 2 weeks. But I'm also going to have Ed Ponzi on the program on Monday. If you guys know Ed Ponzi, he's one of the foremost Forex guys, got some books, always on CNBC and all these media sites. Who else do I have next week? Sam Evans will be on Thursday. Wednesday, I'm going to have Justin Krebs. Tuesday is open right now, but I'm trying to get someone on the program who hasn't been on yet, but I'm going to leave that one as kind of a mystery. Now, you know what, Gary? I would actually bring Kramer on the show. I don't think he's a scumbag. I think that he's put himself in a position where I believe he's disingenuous to the interest of his end users. He's more interested in being a theatrical, funny, entertaining show than I think actually making really good calls about the market. You look at his track record, it's pretty dismal. There's a site that just tracks his picks. Obviously, he's got a tremendous amount of experience in the financial markets. That I can't discount. And I'd love to pick his brain. I think he's got a lot of information in there. Would I give anybody direction and say, hey, you want to learn markets? Watch Jim Cramer? Absolutely not. No way in hell would I ever do that. He's entertaining. That's really what he's there for. He might call out certain companies. Look at him. But if he says buy, do not buy. There's actually studies that show that his picks spike because of his buy, because all novice people, and of course now Robinhood's not going to help that out, but then all of a sudden they give those gains back over the next few days. So maybe you're looking for what? A short. If he says buy, and it shoots up in his supply, these are great trading opportunities. It's just one other thing to look at, because fundamentally, if he recommends stock ABC and says buy, and it shoots from $10 to $13, did the company change? No. Just a bunch of hapless idiots who don't know how to pick stocks went out there and bought it because he said to buy it. So you got sheep buying it. All of a sudden, the analysts are going, wow, it was $10 yesterday. It's $13 today. I'm going to sell. And also, it could be that those who asked him to review that specific symbol already knew that. And of course, they bought in, and now they're unloading, front running. Of course, I would love if we could have a fully 100% transparent view of what goes on behind the scenes on some of those types of programs where we have an industry expert calling out levels all the time. I'll bet you would see channel after channel after channel of institution feeding information to that celebrity. Pump this stock or dump this stock because we need it pumped or dumped. Thank you very much. Here's a new car for you. Anyway, Peter Navarro, huh? I don't think Navarro's going to waste his time anymore with me. I think he owes me. Mr. Navarro does owe me for all my contributions to his book. If you read his, I think I've already griped about this, but his book, If It's Raining in Brazil by Starbucks, there's like 1 or 2 chapters that are direct 100% transcriptions of my teaching at his master's class, his MBA program at UCI. I could not believe it. I was like, you didn't even ask me. You just took it, rewrote it in your words. It's my stories, 100%. And then you said, thanks, Merlin, for your contributions. You owe me a show, Navarro. You owe me a show. At least give me a signed book. Buffett. Wouldn't that be great? I'd love to get him on the program. That's not going to happen, I'm pretty sure. Joanne Farley. Yeah, I'm going to get Joanne Farley on the program. Joanne Farley's an interesting one. I always write these names down. Mr. Rubber Ducky, I'm going to try to get him on here real soon. Gabe Velasquez as well. We got there's a whole list of great people. I'm trying not to repeat too much, but I do have a lot of great guests that want to keep coming on, so why not have it happen? All right, guys, that will do it for me today. I hope you guys had a great show out there. Of course, do me a favor, click that thumbs up button. For those of you who made contributions out there today, thank you so much. We had some very nice contributions. James, let's see, I'll go through. James Miles. We had Gary, and we had Rajesh. Boy, it was a great day. I'm going to go out and buy myself a new camera. No, I already bought it. And then early on in this session, we had Tracy and Chuck as well. Thank you guys for the kind messages, all the support that you've given over the last, I guess this is the 84th show we've done. It's the 84th show. Seems so weird when I look back at Power Trading Radio and I did almost 2,500 shows. Who knows? Maybe down the road we'll be at 2,500 for this one. That's a long, long way down. Anyway, hope you guys have a fantastic weekend. Be safe out there. Wear your masks. I had a mask here on the desk, but I got lost. Anyway, have a great weekend, everybody. I will see you on Monday with Ed Ponzi talking about Forex markets. We'll see you then. Take care.